What do you mean that the Federal Reserve is doing yet another round of federal interest rate cuts? They're doing 25 versus the 50 that they were anticipating and forecasting. And then for 2026, they're going to keep it a little bit spicy because it's not really that bad with you and I having to handle tariffs, inflation, and everything else going up. So you usually see headlines like this telling you this is what's going on in the economy, right? Right. But in your economy, you're probably figuring out how does that interest rate cut figure out into my wallet, because while it doesn't look bad on reports, in reality, it is. And even if the federal interest rate cuts don't really cut into your wallet, the cost of living is cutting into it. So let's take about the 3 typical advice that you're seeing during this time and how to actually do it within your wallet. Let's get into it. All right. So in this economy, tip number 1 is that they are telling you to pay down high interest rate debt. Good. And that's typically what you should do. But in this economy, your wallet and your paycheck is saying that's not going to happen. So what I would tell you to do is look at your bills as well as your loans and seeing what can you negotiate as far as interest rates. So when you're paying more towards the principal as well as a little less to the interest, but also what can you give yourself cash flow? Also check to see if that creditor or anything has any hardship programs available to give you a little bit more breathing room, and find and negotiate other bills to give you some cash flow. The second thing is I want you to, yes, they say build a rainy day fund, but where? How can you figure it out? The same way that we talked about in tip number 1, I want you to go through your bills and your expenses and to see what can you negotiate and what do you really need in the allocation that you have, and see what you can find as far as little pockets of cash and put it into a high yield savings account. You knew me if you know I was going to say that. Right next. Tip number 3, in this economy, they usually tell you to compare loans and manage your budget. Right. You should manage your budget. Like we talked about in tip number 1 and tip number 2, I want you to negotiate and get that interest rate down. Find some cash flow, even if it's $5 or $10. But then another thing I want you to layer it down is to understand what's going on in your budget. I want you to forecast off of facts, meaning going back and looking what's going on with your stacks versus off of feelings. And then track your own. Can't measure what you don't track. So I want you to not only set a budget, but track and tackle it. You might need to curate a best case scenario with the dough you have. Yes, you need more money, but we need to understand the money to manage. So the interest rate cuts is yeah. You hear that, but you need to handle your own personal economy and seeing what could you do with what you have and negotiate the ebbs and flows of whatever this scenario unfolds. So let me know, how are you feeling about the federal interest rate cuts and the more cuts to come? Stay funded. That's it.